Cardano just had one of the most shocking whale catastrophes we have seen all year. And it perfectly highlights where ARA stands right now, why the price keeps bleeding, and why retail accumulation versus whale selling could decide the next major move. So, if you want to understand whether Cardano is setting up for a major rebound or heading towards new lows, you're going to want to stick around because this video covers everything from the $6 million whale disaster to the technical levels that matter, to the on-chain signals that are quietly flipping bullish even while price action looks terrible. And you need the full picture before you decide what Cardano is really doing right now. Hey guys, you are watching Crypto Blogspot. I make unbiased crypto videos with no sponsor influence. So if transparency matters to you, make sure to like the video and subscribe. And remember, this is not a financial advice, just information and analysis. Now let's get straight into it, because this Cardano situation is one of the most chaotic combinations of bearish price action and bullish on-chain signals we've seen in months. And it all starts with the whale who accidentally burned $6 million in literal seconds. So here's what happened. A dormant Cardano wallet that had not moved in over 5 years suddenly woke up with 14.4 million ARA, that is worth around $6.9 million at the time of the transaction. And instead of routing that trade through a deep liquidity pool or splitting it into smaller chunks, the holder slammed the entire stack into the Cardano decentralized exchange pair with almost no liquidity, swapping everything into USDA, which is a tiny Cardano native stablecoin that barely has a $10 million market cap. And because the pool had almost no depth, the entire trade nuked itself instantly. The whale received $847,000 worth of USDA back, meaning they lost around $6.05 million in a single transaction. And the price impact was so extreme that USDA temporarily traded above $1.20 before collapsing back to around $1.04 once the liquidity normalized. And what makes this even more painful is that this wasn't a scam. This wasn't a protocol exploit. This was pure user error. No slippage checks, no routing protection, and no awareness of how low liquidity decentralized exchange trades behave. Analysts at OneSafe even said this should be the textbook example of why you never push size into shallow pools, because slippage will vaporize your capital instantly, and that's exactly what happened. And that would be enough by itself, but unfortunately it perfectly matches what's happening with Cardano right now, because this wasn't a random whale accident. This happened during a period where whales have been unloading more than 440 million ARA in just the past month. That's around $183 million worth of selling pressure at current prices. And that sell-off is exactly why Cardano has failed to regain momentum, even though retail traders are clearly buying the dip. On-chain data shows something very interesting. While ARA was making lower lows from November 4th to November 16th, the money flow index was actually making higher lows. That means retail was stepping in aggressively at lower levels and absorbing the sell pressure, which is why ARA is still hovering around 41 cents instead of falling straight to 35. But retail buyers alone can't fight whales dumping hundreds of millions of tokens, and that is where the price structure starts to matter. Cardano has already lost the 60-cent support that held for months, and that line has now flipped into a heavy resistance zone. Analyst Valdrin Tahiri calls this a major breakdown because the longer ARA stays under 60 cents, the more likely it is that the price drifts lower. And remember, Cardano has been stuck inside a descending channel ever since it peaked at $1.33 back in late 2024. Normally, these channels resolve upward, but this time it didn't. ADA broke down instead of breaking out, and that tells us something very obvious but very important. Buyers are no longer in control of the long-term trend. However, it's not all doom and gloom because the on-chain metrics are flashing undervaluation signals that historically have led to rebounds. The 30-day mvrv for Cardano is currently negative 20.47%, and the 7-day sits around negative 13.44%. What that means is the average recent buyer is underwater, and historically every time mvrv hits this zone, Cardano finds a local bottom and rallies. We also have an RSI divergence showing up. While price created lower lows, the RSI created higher lows, and that's usually an early sign that momentum is shifting from bearish to neutral and potentially to bullish. And then we have derivatives data confirming that sentiment beneath the surface is changing. Funding rates have flipped positive at 0.006%, which means longs are currently paying shorts, meaning more traders expect upside than downside. And the last two times funding flipped like this, ADA went on sharp short-term rallies. So what we have here is a very strange setup. Structurally bearish chart, whales unloading hundreds of millions of tokens, retail quietly accumulating during oversold conditions, and on-chain signals flashing undervaluation. So the big question becomes, what breaks first, the whales or the chart? And that brings us to the most important price levels right now. Short-term spot sits at 41 cents and even more importantly 40 cents. ADA tapped the low 40-cent zone after an 8% drop and stabilized. If ADA loses 40, the next psychological support isn't until the mid-30s, which would be a full retrace of the December bull structure. But if ADA holds the 40-cent region and reclaims 45, the next major challenge is 44 cents, and that matters because 44 is where the liquidity walls sit for the last major distribution phase. A clean breakout above 44 opens the door to 62 cents, which is also the 50-day EMA, and that's where the real test happens, because until Cardano reclaims 60 cents, it has no bullish structure. Now the bigger problem here is narrative pressure. Cardano is no longer protected by hype in the same way Solana or XRP are. Solana just pulled in $382 million in ETF inflows. XRP just launched the highest volume ETF of the year on day one. Cardano has none of that. For the first time in years, it's missing a major institutional catalyst, and that is one reason whales may be offloading. But here's where the story flips again. The whale selling represents distribution, but once that distribution slows, retail positioning combined with undervalued metrics creates the setup for an upside reversal. And that's why I think Cardano is entering a critical game of equilibrium. Whales selling versus retail accumulating. Whoever breaks first decides the direction. And we have seen this movie before. In 2022, whales dumped ADA for 4 weeks straight while retail absorbed. Price stayed flat. Then whales pulled back and ADA rallied 90% in 6 weeks. The exact same structure is forming right now, but until we see whale selling slow down, the downside remains open. And the liquidity mistake is the perfect example of how fragile on-chain liquidity has become, because if one trade can rip $6 million out of the market, then large sellers are absolutely capable of crushing price if they choose to. And finally, we need to talk about the macro side. Bitcoin is trading near $87,000 after failing to reclaim higher levels. The entire altcoin market is under pressure. The average crypto RSI is sitting at 44, and the fear and greed index is back to extreme fear. In that environment, even fundamentally strong coins drop simply because people panic, and that's why the Cardano bounce levels are so critical right now. The bullish scenario is straightforward. ADA holds the 40-cent region. Retail keeps accumulating. Whale selling slows. Funding stays positive. And that triggers a move past 54 and potentially toward 62 cents. The neutral scenario is ADA chopping between 40 and 54 for weeks while whale wallets continue slow distribution and retail just keeps absorbing. And the bearish scenario is 40 failing. Whales continue to sell aggressively and ADA collapsing into the upper 30s before any meaningful reversal. And honestly, all three outcomes are still possible right now. But what matters most is that for the first time in months, Cardano is technically undervalued at the same time that long-term holders are increasing their supply. That combination has historically been the beginning of major reversals, but only if whales stop dumping. So keep your eye on 40-cent support on the whale wallets and especially on the funding rate. If funding stays positive and price holds support, this could turn into one of the most interesting upside setups Cardano has had all year. But if whales continue their sell-off, it won't matter how undervalued ADA is. Price will follow liquidity and liquidity is leaving. And that is your complete Cardano breakdown. If you appreciate the data-driven approach, make sure that you like the video and subscribe because this channel will always give you facts, not hopium. No sponsored scripts, no hidden promotions, just real market analysis in real time. Thank you for watching and I'll see you in the next one. So stay tuned.